today's video is all about journalizing accounting transactions, and we are going to understand what are the different types of journals, how it affects the double entry accounting system, what are the step-by-step process of doing journalizing, and what are the different types of accounting transactions have. Why is it important to record financial transactions? First, it is useful in financial reports to measure the performance of your business to see if your business is doing well or badly. Second, it is also useful to manage your cash flow. Third, it is helpful to keep things organized. Fourth, it is also useful at tax time to avoid missed deduction at the end of the period. And fifth, to record as a proof when the time your business will get to be audited. And this process is what we called bookkeeping process.
What are the types of journals? The general journal and special journals. General journal refers to a book of original entries in which accountants and bookkeeper record day-by-day transactions. It is like your everyday notebook where you record notes, but instead you record business transactions. Special journal is any accounting journal in the general journal that is used to record and post transactions of similar types. In other words, it is like the general journal, but it records specific transactions such as sales or purchases, while general journal is used for mainly adjusting, posting entries, and all entries that does not fit to special journals. So why are there different types of journals? Well, do you remember back on high school? We like to take notes on different notebooks, right? If you agree, but just like that, accountants have different kinds of journals, like the special journal for its convenience in recording, and it would be much easier if the transactions recorded are already categorized, right?
Journalizing transactions adhere to the system of double entry accounting. Double entry accounting means that the dual effects of a business transaction is recorded. Thus, for every transaction, there must be at least one debited account and at least one credited account as well. Double entry system also promotes equilibrium. This only means that the debited and credited accounts must be equal. Take for instance, the business acquired office equipment for 15,000 pesos on account. Here, the business recognized an increase in asset and liability. You have to debit the office equipment for 15,000 pesos and credit accounts payable for the same amount. Consequently, these prove duality and equilibrium.
The journal entry look like this. First, we have the date column. This is the date that the transaction transpired. It is important because it affects the accounting period that the transaction is gonna show up. Next, we have the name of the accounts that impacted by the journal. In this case, notice that the credit account title is indented so that it will be easier to see. Then we have the separate columns for one of the debit and credit entries. And finally, there is a general description below the credit account titles. It is a good practice to give a solid explanation here, since you may refer back to the journal in the future. And a good description will make it much easier to remind yourself why you entered it in the first place.
Remember, we're talking double entry bookkeeping, so there must be at least two sides to the journal, and the totals of those debit and credit columns must match each other exactly because the accounting equation always balances.
The corporate world has different forms of accounting transactions, which are any business operation that has direct bearing on a business financial status and financial statements. I do have main types here that must be revealed to you. First, received revenue for a service provided to the client as a cash payment. This transaction reflects a rise in cash and revenue. Second, borrowing money from a lender, like getting a business loan from a bank. This will increase in cash and an increase in loans payable. Third, purchasing fixed assets for your business such as an office building, a car, or a computer software that results an increase in PPE and a decrease in cash, or an increase in accounts payable if it is on account. Fourth, recording the depreciation of a fixed asset, example, the value your work vehicle losses over time, and last, paying salary to employees that would lead to an increase in expenses and a decrease in cash. All of these types of accounting transactions would be journalized to create accurate financial statements.